Thank you, ladies and gentlemen, for keeping tuned here at Smart 24. My name is Anthony, and we are here driving you into the financial market world. And this is financial markets as we look at what's happening on the scene in East Africa and, of course, in particular here in Uganda. Now, in news coming in from the East African Community legislative body, that is the East African Legislative Assembly. Yesterday, of course, we had the budget for the East African Legislation Assembly read out by, of course, the Prime Minister there for the community. And, of course, East African Community has said that East Africa is on track to achieve a single currency by 2024, according to the First Deputy Prime Minister and, of course, Minister of the East African Community Affairs, Rebecca Alitwala Kadaga. She has said that if everything goes according to plan, the East African Community, of course, which includes Uganda, Kenya, Tanzania, Rwanda, Burundi, South Sudan, and of course the recently added DR Congo. If everything goes well, we shall have a single currency for all these countries by 2024. Speaking during the Uganda DRC Business Summit in Kinshasa, Ms. Kadaga said member states are now working on final details to choose a country to host the East African Monetary Institute that will later become the East African Central Bank. By the end of this year, she said that we should be knowing which country is hosting the Monetary Institute. The institute will be the East African Central Bank. They also expect that if we move according to plan, by 2024, we shall have a single currency, as she told more than 200 delegates at the summit in Kinshasa. Already, Ms. Kadaga noted Uganda, Tanzania, Burundi, and Kenya have submitted requests to host the institute, and the 4 countries are being reviewed for the decision. Ms. Kadaga was responding to a concern in which traders had said they were finding difficulties to trade in certain currencies. The East African Community now has 7 member states, including Uganda, Tanzania, Kenya, Rwanda, Burundi, South Sudan, and of course, Dr. Congo, which formally joined the bloc in April. However, only 4, apart from the DR Congo, have so far ratified the single currency protocol right there. South Sudan remains an observer state because it has not yet harmonized internal laws and still has laws that prevent free movement of people across the borders of South Sudan and other countries in the East African Community. The monetary union is the 3rd step in the East African Community regional integration that is expected to be capped by political federation. Already, East African Community member states have been working on full attainment of a customs union and a common market amid the challenges, number of challenges, which include non-tariff barriers, trade blockades, and closure of border points like recently we had with Rwanda and Uganda. Whereas the East African Community has set the 2024 as the year of attaining the monetary union. A 2020 report by the United Nations Economic Commission for Africa noted that divergences in monetary policies continue to stand in the way of attaining the single currency. It is critical to examine how economies are converging before forming a monetary union, the report said, noting that an assessment of ceilings for inflation, fiscal deficit, a gross public debt, and a sufficient level of foreign exchange reserves had returned a lot of convergences which partner states need to align before forming a monetary union. Speaking during the same summit, Mr. David Livingstone, Ebiru, who is the Uganda National Bureau of Standards executive director, said that Uganda will ensure that goods that are exported to the Democratic Republic of Congo meet the required standards. Uganda and DR Congo Business Summit, organized by Private Sector Foundation Uganda, that is PSFU, and the Office of the Presidential Advisor, Special Duties, seeks to help Ugandan investors find investment opportunities in the Democratic Republic of Congo. Mr. Asimwe, the PSFU Executive Director, said the event is a reflection of what the business community in the two countries want to engage in. And of course, that story we will be following up right there as the East African community seeks to have a single currency by the end of the year 2024, which the United Nations says, this is not possible given the blockades and so on and the hurdles that the countries in the East African community are facing, with borders being closed, with trade issues and so on. I think they're saying it's impossible, but we shall be watching, and we pray this happens because it will smoothen a lot about our investment and trading. As you can see, this affects the currencies affect our trading on the stock market. As you see, for example, companies that are cross-listed on the exchange that are from Kenya, if you want to buy shares, for example, in the Kenya Commercial Bank, you have to buy the Kenyan currency. And because these are Uganda shillings, but the companies there are actually trading in Kenyan shillings. So you may buy this, and then when you get to Kenya, you have to change the currency, and that could have some costs implication on you as an investor. So I think having a unique currency that is common for all the East African community members will smoothen our trade, even on the stock markets, because that way we will be able to buy shares across borders conveniently with the same currency without any hurdles of currency changing as we have today. I hope we are actually going to achieve that and smoothen our running of business in the East African community. We'll be following up with that story and more on the East African community. Moving on to another story, new data protection portal seeks to solve cyber crime. Now, government has launched a new data protection portal which it will seek to fight cyber crime. The privacy portal developed by the UN, that is the Capital Development Fund, will ease reporting, processing and resolving data protection and privacy complaints and, of course, breaches. It will also ease registration of persons and organizations that collect and process the data. Now, speaking at the launch in Kampala, Dr. Amina Zawede, who is the ICT Ministry Permanent Secretary, said while many transactions are happening online, there has been an increased exposure to cyber crimes and, of course, cyber risks that which the portal seeks to mitigate. Banks and telecoms have recently registered an increase in phishing attacks through which sensitive personal data such as usernames, passwords, and credit card details are obtained by fraudsters. Data from the annual police crime report indicates that in 2021 alone, there was an increase in economic crime, such as financial fraud, which resulted into more than 10,000 economic crimes. Ms. Stella Ali Batiza, the Data Protection Office Director, said that the portal will also deal with the challenge of unsolicited messages received without verifiable permission. The portal targets more than 5,000 organizations that hold sensitive personal data. Uganda is the first country in the region to automate the process, with about 338 organizations being registered and classified as data controllers and data processors and, of course, data collectors. Mr. Ali Batise said already a number of organizations such as telecom and, of course, 85% of banks in the financial sector have been registered in the portal to mitigate cybercrime. Others include insurance providers, healthcare management systems, hotel and accommodation facilities, institutions of learning, and a number of government bodies. Dr. Hatwib Mugasa, who is the National Information Technology Authority Executive Director, said data breach can happen at any stage, noting that a social security officer processing an application can breach someone's data in real time by accessing information stored in other government systems. Therefore, he said, guided by the National Information Technology Authority, Uganda, National IT Survey 2017-2018 report, the portal echoes provisions of the law that emphasize privacy and data breach as serious crimes right there. And of course, this story brings us to what we're going to discuss later on here on the program about, digital marketing and the security of digital, data. So since many people have given in their data in terms of, the NIRA, in terms of, when they're going to register for maybe bank accounts, or when they're going to access anything. How secure is your data? How secure is your mobile money PIN? How secure is your bank account number, your TIN numbers, and all this other data that's online? So this portal seeks to see that we have security over our data and against phishing attacks and, of course, cybercrime that has seen an increase over the last couple of years. Now, we shall be having Mr. Peter Ogwang, who will talk to us about the same, as he is an expert in digital marketing and, of course, digital assets right there. And he will be giving us a little bit of insights into the challenges around the digital space, digital marketing, and the like. We'll be following up with that and, of course, more later on to come. Moving on to another story, Shelter AFRIQUE seeks to start search for a new chief executive officer. Now, the board of Shelter AFRIQUE is looking for a new chief executive to replace Mr. Andrew Chimponda, who was fired in February. Mr. Chimponda joins a list of executives who have left the Pan-African housing financier abruptly or under a cloud of controversy. Reporting to the Shelter AFRIQUE Board of Directors, the managing director has overall responsibility for the implementation of Shelter AFRIQUE Shelter AFRIQUE's mandate to mobilize resources for the development of housing and related infrastructure in Africa, said the agency in a notice. In collaboration with private and public sector institutions, he or she will identify, develop, and implement housing and related infrastructure projects, mobilize the required resources, manage them, and apply them prudently to enable Shelter AFRIQUE to achieve its mandate. Mr. Chimponda, who took over the helm 3.5 years ago, had been tasked with steering its turnaround following tumultuous years that saw it pushed into a financial crisis. Now, the board did not disclose why the Zimbabwean national was let go, only stating that the hosting lender is transitioning. And of course, Shelter AFRIQUE, owned by over 44 countries and 3 development institutions, the African Development Bank, the African Reinsurance Corporation, and the African Solidarity Fund, AFS, and has had 3 CEOs in less than 8 years. Mr. Chimponda joined the housing financier in September 2018, taking over from Sierra Leone national Femi Adewole, who served for less than 2 years in the acting capacity, and then as a substantive managing director since early 2017. Mr. Adewole, who was appointed following the resignation of Ugandan James Mugerwa in February 2017 after a 3-year stint Mr. Muwowo, the CFO, that is the Chartered Financial Organist, therefore served as in the interim. And of course, Mr. Mugerwa, who took over the office in August 2014 after the acrimonious exit of Mauritanian national Alassane Ba, left the company a day after board members adopted the forensic audit report implicating him in subprime lending and creative accounting. The undercurrents at Shelter Afrique burst to the fore in September. Burst to the fore in the September of 2016 when the firm's head of finance, Mr. Godfrey Waweru, blew the whistle via an email on the lender's financial health. The financier was at the time struggling with losses amid high financing costs, which negatively affected its ability to raise new capital and fund its other new projects. Under Mr. Chimponda's tenure, he oversaw a turnaround, including raising capital and debt restructuring. And the firm last year said it completed the repayment of the balance of $186 million owed to 8 lenders 3 years ahead of schedule. Shelter Afrique is eyeing to roll out its planned issuance of $1.25 billion worth of new bonds from African capital markets. It will be seeking $500 million from East Africa and a similar amount from Nigeria, with the remaining $250 million coming from its francophone markets. That is a story right there for Shelter Afrique, a financier in Africa that does housing. It's going to look for a new CEO. Remember, Shelter Afrique are now looking at, most importantly, rolling out $1.25 billion worth of new bonds from African capital markets. So the African capital markets actually are eyeing this $1.25 billion worth of bonds. That is going to be a wow for the African markets, and I hope here in Uganda we shall also take advantage of those bonds by buying and participating, so that we can grow our capital markets and of course our saving and investment portfolios, so that we can benefit from the capital markets space. We are going to go into a short break. We'll return shortly. We'll be talking to Mr. Wang if he has arrived later on, and we will be still taking you through what's happening on the capital market scene. Don't go anywhere. We'll be right back after this short break.